Good morning, everyone. How you doing? So we're Clark. We are gathered here together. We have Simon Walsh.
Morning, everyone.
Mr. Phipps.
Morning.
Juliet.
Morning.
Rachel.
Rachel's on mute.
There's time for everything.
Morning.
Casey.
Morning.
Kalani.
Morning all.
Nigel.
Yes, good morning.
Gemma.
Hi everyone.
Myself, Ross.
Good morning, everyone.
And Amelia.
Morning.
Well, there's no doubt about it. It's been a hell of a year. I mean, we started these things with Hugh amongst us who we've lost. But you know, there's good news out there. Trump's gone. Maybe Brexit will finally be over, and we certainly found a vaccine. We are Uri Clark. We're a multidisciplinary firm. This is us just trying to give some guidance and thought to everything that's going on. You can find previous episodes on YouTube. We'll put this up on YouTube. And so we begin with Mr. Simon Walsh, please.
Great, thanks, Andy. And once again, good morning, everyone. We've got quite a bit to get through today, so I'm just going to skip through these slides before I hand over to my colleagues. But when coronavirus sort of caused the interruption it did, what feels like a lifetime ago, the UK government announced a number of initiatives for businesses, and a number of those initiatives have been extended to the end of January. So I just wanted to quickly recap on some of those major sources of funding that the government has helped us with. The first one, and these are in no particular order, but the Future Fund is, as I said, applications are now open until the 31st of January. But essentially, the Future Fund is a matching fund. So if you're a UK incorporated company and you've raised more than £250,000 in equity from third-party investors in the last 5 years, and you're not a listed company, then you're actually able to apply for money through the Future Fund. One of the tips that we'd like to share with you is that if you haven't yet raised money through the Future Fund, then it's probably worth having a chat to some of your existing investors, some of the bigger investors, because it is effectively a matching fund. So if you can find, for example, one of your investors to put in another £100,000, then the government will match that £100,000. Interestingly, the government's made it very, very easy. All of the convertible loan note documentation and everything that's required to put into place the Future Fund is all pro forma, and it is available on the website. And then you just need a little bit of assistance from a lawyer to or lawyers to finalize the investment from your investors. So if you haven't taken advantage of that, then it's worth having a look at. CBILS is the Coronavirus Business Interruption Loan Scheme. This was probably one of the most controversial at the beginning. This was primarily run by all of the banks, and it gave SMEs with turnover of under 45 million the opportunity to access a cheap loan, effectively up to £5 million. There are a number of different forms that those loans could take, but the key point here is that the first 12 months of that loan was interest free, and it was essentially backed by the government.
They've announced, I saw in the FT yesterday, they're going to carry on with loan schemes for most of next year, they said, out of interest at slightly higher interest rates. Anyway, so. Yeah,
it's not surprising. So if you've not taken any advantage of CBILS, and it might be worth having a look at. Just a word of caution or a handy tip: there are lots of businesses offering to broker your CBILS application. That there can be an advantage to you in that, but what we've found is that some of those brokers are using an incorrect definition of a business in difficulty, and that could effectively impact your CBILS application. The next initiative that the government introduced after CBILS, primarily as a result of CBILS being quite difficult to access initially, were these things known as bounce back loans, and effectively this gave small and medium-sized businesses the opportunity to borrow up to £50,000, so anywhere between 2,000 and 25% of your turnover, but up to a maximum of £50,000. Once again, a little bit like CBILS, it was guaranteed by the government. Very, very little paperwork, no interest on the first 12 months, and sort of low interest thereafter. If you did access a bounce back loan, but you never access the full amount that you were entitled to, then the banks, you can actually apply to effectively top up that loan. So something you might want to consider doing, given that it's a reasonably straightforward process. A couple of other comments to make about sources of funding. For those of you who do R&D work here, or not just in the UK, but anywhere in the world, a big tip is if you need to put in your R&D claims, you should get them in as quickly as you can, because of course this will help with your cash flow when the funds come back to you. Just a couple of points. If you happen to have a CBILS loan, or you had staff on furlough, you need to be slightly careful, because both CBILS and furlough are classified as state aid, and state aid potentially impacts your eligibility for R&D claims. But in general, CBILS, if you had a CBILS loan, it should have been, or was probably, to support the business as a whole, as opposed to specific R&D projects. So you should be okay in that respect. And then similarly with furlough, essentially furlough was for staff who couldn't work. So they shouldn't have been working on projects. And so therefore, even though furlough is state aid, unlikely to have any significant impact, but it is important to actually just double check when you're doing your applications. Just a helpful tip there, just as a reminder, if you're not already accessing R&D claims, you don't need to do the development in the UK. It can be done anywhere else or anywhere in the world. And essentially at a very, very high level, the UK R&D scheme gives you the opportunity to receive up to 33% of your expenditure back as a tax cash credit. And then finally, what we're seeing, and it's been very, very interesting, is that there is actually quite a bit of money around. We're seeing lots of VC and private equity money going into businesses that were in good shape and have the potential to continue to be in good shape when trading resumes to sort of some semblance of sort of pre-2020 levels. And we're also seeing a lot of activity in the mergers and acquisitions space. So if you are minded to look at bringing an investment, don't think that there are not funds or people around sitting on reasonable amounts of cash that might be interested in investing in your business. And even if you're thinking that now is not the right time, a tip there is that if you're a little bit quieter over the festive season, then it's a good opportunity to get all of your corporate documentation into good order, because if you do go through an investment process, then your investors will want to take out some level of due diligence, depending on how much money you're seeking. It will depend on how detailed that due diligence is, but at the very least, you should ensure that all of your board minutes and sort of commercial agreements are all in order, they've been signed, and they're stored in a central and safe place. And I am now going to hand over to my colleague, Ian Phipps. Thank you.
Thanks, Simon. On the stamp duty thing, there's just one key message to get over, which is 31st of March 2021. That's all you need to remember. I'll expand slightly, but pretty much that's it. We're in this wonderful SDLT reduced rate regime at the moment, where for property purchase, residential property purchase up to 500,000, there's no SDLT payable on the purchase. That has kickstarted. It certainly kickstarted the housing market again earlier in the year, but the feedback now is that land registry, local property searches, because there's so many buyers, are being swamped. There's quite a lot of delays in the system. And similarly, just also have on the radar that non-UK residents purchasing in the UK after 31st of March are going to pay an additional 2% stamp duty over and above whatever the normal charge is. So the handy elf tip for this one is, if you want to get the reduced rate, get on with it. Next slide, please. one of the key date for SDLT is completion date. So not exchange of contracts, it's when the thing's completed. And I know there's a lot of angst amongst certainly a lot of the property clients I deal with, the buyers from them, that actually getting completion done before the 31st of March to get the rate. Now, completion is not necessarily when the final deal's actually done. We can get practical completion. There's a range of things that sort of generate that, but one example of that is that you pay 90% of the purchase price into a solicitor's escrow account. That would count as practical completion. So even if you can't get all the paperwork over the line by the 31st of March, you could achieve that, but you definitely want to basically just make sure that whatever you are planning to do is going to work. But there are a few ways of getting there over and ahead of the practical completion. Next slide. Sort of counter to this is, so we've also been in this Help to Buy scheme. So first-time buyers, basically primarily most first-time buyers now have been using the government's Help to Buy scheme. It's a very generous scheme, equity loan support. The scheme has just ended. And amazingly, the new scheme doesn't start until the 1st of April 2021, which is the day after the SDLT rate ends. So obviously we've got the accelerator pedal being hit with the SDLT relief, and now we've got the brakes being hit at the same time with the delay of the new Help to Buy scheme. So what started off as a boost to the housing market has now put a firm brake on many purchases. So the handy elf rant at the time, typical government mixed message. Next. So I've got the honour of also going into the what the furlough, our favourite word, the F word. Very quick, you will all be delighted to know. So furlough support extended until the 31st of March 2021. Employees cannot work while on furlough but can be brought in part-time. And obviously you get the furlough grant for the hours that they haven't worked. You can put people on furlough who weren't on furlough before, but they must have been effectively in the PAYE system as at 30th of October 2020. And there's a slight technicality there, but I won't bore you with it. One of the key sort of things that came in as a bit of a finessing of the scheme was you can no longer claim furlough for employees if they're under notice of termination. And the handy elf tip is the deadline to submit the previous month's claim is now the 14th of the following month rather than the end of the following month. So just be wary of that deadline. And I'll hand over to my colleague, Juliet.
And just before Juliet goes, I just want to let everyone know that we are going to take questions and answers. So for all of our participants, if you have any questions that come up as we're moving through these slides, please use the Q&A function on Zoom, and we will attempt to answer some of those questions at the end, and then we'll circulate answers to any of the unanswered questions after the webinars at the end of the day. Thank you, Juliet.
Perfect. Thanks, Simon. So the joy of Brexit means end of free movement. That means we're going to need visas. So if we can move on to the slide. In short, we will need visas, and my tip is really please start budgeting for visa fees and processing times. This is something we haven't had to do before and we'll need to do post the 31st of December. So I have a few top tips here. So literally, I'm going to skip through 5 things. Right to work. In the UK, the obligation is on the company to check that people have a right to work. What that means is you must obtain copies of people's passports and visas if they're here on a visa. If you don't, you're risking a £20,000 fine per illegal found. And believe you me, I've tried many times to get out of that for many companies, and it's very difficult. So Brexit is happening. So from the 31st of December, from 1st of Jan onwards, we will need visas around Europe potentially, and for Europeans coming in. So those that are currently here, any staff here that you employ who are European, so EEA nationals, please make sure they have applied for the EU settlement scheme. Big words for basically ensuring that they can remain here visa-free and have a right to live and work. It's a free scheme. It takes like literally a matter of minutes. And the company must hold proof that that individual has applied for it. Then in terms of if you're looking at recruiting any Europeans that you're thinking of taking on in the new year, please try and bring them in before the 31st of December. They can come in freely without needing a visa prior to that date. Post the 31st, they will need visas, and you as a business will need to apply for a sponsor license. If you've already got one, then then that's fine in terms of you can use that to sponsor people. But if you haven't, please crack on and apply for a sponsor license. They're envisaging that applications are going to go through the roof, which means that then they go on slow. So the sooner you can get your application in, the better, and then you'll be set up ready to sponsor anybody. There are new visas coming into play. For those that know the sponsor license system, the new one is now less restricted. You haven't got to go through resident labour market tests, but just be mindful for budgeting purposes, you'll need to budget for visa fees and processing times and management time. So you're looking at about £3,000 for up to a 2-year visa for one individual. So just be aware of that. And then I am spending a lot of my time dealing with the joy of all the staff that have decamped to their home countries. Wouldn't we all love to be on a beach somewhere beautiful on a London wage? So that's what I'm experiencing at the moment. So that was okay when it was just a few weeks. Obviously, COVID has gone on for months and months and will continue into next year. So my massive tip is please get those staff back into the UK, particularly if they're Europeans and they haven't applied for the settlement scheme. But bring them back in or start regularising. The rule of thumb, so you know, is wherever individuals are and are working, that is typically the law and tax system that applies. So it is quite likely you might need local payroll systems. So watch out. Some countries are superb at presenting you with tax bills. So just be mindful of that, please. That is it.
It's 11 p.m., isn't it, on 31st of December?
Oh, yes. Yeah, get in your flight. Yes, the cutoff for free movement is 11 p.m. on the 31st.
And don't have any salespeople outside. Well, wherever you've got salespeople around the world, you've probably got taxable problems with the company as well as the individual.
Yeah,
so,
yeah. So please do regularise. So Andy is right, from the individual point of view and from the corporate point of view, depending on what they're up to in those countries. A lot of clients have created presence, whether they liked it or not. So watch out. I'm now passing to tip number 5 and Rachel.
So I get the Brexit joys, or some of them, what was our favourite word before it became furlough. Can we move to the slides? So firstly, royalties and interest. So while we've been part of the EU, then any payments of royalties and interests have been done without tax deduction. From the 1st of January, there is likely to be tax deduction from various member states. The amount will depend on the double tax agreement with the specific member state. So please make sure you check before you make your payments. If you're setting up structures, have a look what the treaties are and take that into account in deciding what to do. If you've already got a structure, have a look at it and see whether you need to make any changes. Same really goes for dividends. So again, historically, no tax deducted when they've been paid, but the double tax treaties will in some cases mean that continues. In other cases, there'll be tax and the rates will change. Have a look, make sure you know what you're doing before you vote all your dividends and find that you are signed up for the tax. And then VAT, my very favourite of the Brexit topics, and this is the very, very, very short version. There's a lot more detail. If you do sell in particular goods, you do need to do some work in this area. If you haven't done so already, hopefully you have. But just the high level points, if you want to sell goods in the UK and in Europe from the 1st of January, you're going to need that number both in the UK and in Europe. You're also going to need an IORI number in both the UK and Europe. You can use your UK company to get those, and that's generally what we recommend. There's a lot more stipulated requirements and a lot more administrative burden with various of the EU company setups. So we would recommend doing it through your UK company. The UK has relaxed the rules for most goods and services coming into the UK. So there's delayed duty VAT liabilities for 6 months. There'll be checks on controlled goods like alcohol and tobacco, but everything else will be standard procedures, and there's going to be 6 months to client. Generally, you'll be able to get stuff in, but the problem is going to be getting stuff into and out of Europe. So their compliance starts really from the 1st of January, and you're either going to need some training in the systems to be able to do that, or you're going to be needing to use an intermediary. Again, if you haven't looked at that, please do start and reach out to someone after this. Also, new marketplace rules coming in from the 1st of January, so pushing a lot more responsibility onto marketplaces like Amazon to make sure that they have checked that all of their sellers are meeting VAT obligations, and lots more changes expected from the 1st of July, maybe delayed again. Imagine that, along with a Brexit topic, a delay. Watch this space for more information. And finally, driving in Europe. You're not necessarily going to just be able to go drive there like you have been able to. So you should have a green card, which is an internationally recognised card that proves you've got at least the required minimum level of insurance for the country you're in. You'll need your certificate of motor insurance, the logbook for the vehicle, and whether you're hiring or driving your own car, you're likely to need an international driving permit. If you've got a driving licence and you're over 18, you can get that from the post office, apply for it online, then you've got it if you need it. Top tip. And now I will hand on to Casey, doing personal data flows post-Brexit.
Yes, thanks, Rachel. So essentially, when the UK leaves the EU, it will become a third country. So under the GDPR, they restrict transfers of personal data to a third country, which would be to the UK, unless the personal data is protected in another way, or if there is an exemption. So the exemption that we're looking for the UK is we're still waiting for the decision by the European Commission, which essentially will hopefully deem the UK adequate, which means personal data can continue to flow between the UK and EU without anything needing to be put in place. We can carry on as we are now. However, if a decision isn't made in time before the transition period ends, or if the UK is deemed inadequate, it means other mechanisms need to be put in place in order to allow personal data to transfer from the EU to the UK. That's essentially it. For data that's being transferred from the UK to the EU, that can continue to carry on. There's no changes there at all. And for most organizations, in order, if the UK is deemed inadequate, meaning certain provisions need to be put in place, they are simply just to implement standard contractual clauses. These are very simple to put in place with your agreements. And then separately, 11 of the 12 other third countries which are deemed adequate by the EU have already told the UK that they're happy to continue flowing personal data between them and the UK. So you can see these countries on the slide. I'm not going to read them out, but they've essentially told the UK, we're okay to continue transferring personal data with you. Nothing further needs to be put in place. So we're still waiting for the adequacy decision for EU to UK, and that will hopefully come out at the end of this month. But do keep posted on that because it might affect your transfer of personal data from the EU to UK. Then just one other point, I think my handy elf tip is if you do offer goods or services in the EU and you don't have an entity there, the GDPR does require you to appoint a European representative. This is just a point of contact for your data subjects to have to ask any questions about the data that you transfer, the data that you hold about them, etc. Do check in to see if that does apply to you, as it just might be something for you to look into. I'll now pass on to my colleague Kalani.
Hi, good morning. Let's see what we can do if we really run out of steam. I do have various tools for you. Firstly, the company voluntary arrangement, commonly known as a CVA. This is a new standard form for company voluntary arrangements, which aims to make it easier for small businesses affected by the COVID-19 pandemic to enter the CVA. This is something that was newly introduced by the R3, the Recovery and Restructuring Body in the UK. Let's see the major features. Firstly, it gives a breathing space period to allow a business time to rescue and restructure without fear of action from its creditors, followed by a payment period where a company's debts are paid in line with the CVA. However, no time scale for the time being because it has given us more time to negotiate with the creditors and the company. Additional introductory period of up to 3 months for businesses who haven't resumed trading as a result of COVID-19. And also it can temporarily hold payments if the business is in local lockdown. This way, it will definitely allow businesses to stay open and also to preserve jobs. There are two further tools that we can consider. Firstly, the new moratorium for smaller companies. This tool is available to distressed companies, both solvent and insolvent, to provide a short breathing space free from creditor action to look into various options. However, this has to be monitored by an insolvency practitioner. It lasts for initially 20 business days, but can be extended all the way up to 12 months or even more with the consent of the court. And second tool is the same moratorium, but for larger companies. Next slide, Andrew. Thank you. It helps to restructure finances and operations of financially distressed larger companies. It's a flexible scenario, however, it's supervised by the court. This process can be sanctioned by the court even if a class of creditors has voted against it, provided a class with the genuine economic interest has approved the plan, and none of the dissenting class would be worse off than they were in the event of the most likely relevant alternative, such as an administration or a liquidation. So the handy tip from me is, don't wait, it's too late, act now. Thank you for listening, and let me pass it over to Ross. Thank you.
Thanks, Kalani. I'm going to try and provide you with some Elfie tips and advice on how to help and support staff facing job losses. So if we go on to the next slide, I think it's an understatement to say that COVID-19 hasn't been tough, both on the corporate world and the individuals. And whilst the government offered a number of schemes to support businesses, things such as furlough did not stop record redundancies. You can see on the slide, 314,000 people losing their jobs in the 3 months to September 2020. Young people have particularly been hit hard by this, and as they tend to work in the hospitality, retail, and leisure sectors. It's pretty grim reading. So what can you do to soften that blow? Well, if we go on to the next slide, my main tip is try to be kind to these staff. Remember they're human. Remember how you treat them when they leave will not go unnoticed by those that remain. In a situation like a redundancy, which is not their fault, show empathy. Try and be supportive, as supportive as you can. What else can you do? Well, if you offer employee benefits, remind staff of the assistance programs that might be under these benefits. There are usually employment assistance programs that are added on to, say, health insurance schemes that help support them with their health and well-being. Bring that to their attention again. If you offer employee benefits such as Perk Box, they normally have counselling for staff who maybe the partner's lost the job, that can offer a bit more support. Maybe consider outplacement support. Use a recruitment consultant. Show that you care about the staff that are leaving by offering them access to a recruitment agent that could help them with their CV writing, help them find that next job. And also look at the staff benefits you offer, whether you can extend them post-employment. I know that many of my clients offer this to the staff, where they can extend it, say, for a further 6 months. Speak to your insurer, your insurance broker, to just see what you could do to soften that blow. On to the next slide. A key thing, and this is more of a looking at this long term, people have been really desperate during this time. 2020 has been a tough year for everyone. Anyone who's lost their job has become desperate. I've seen more and more claims being brought, however spurious that claim is. And a big tool, a big weapon for the employee is a data subject access request, which could uncover what would normally be a fair redundancy, turn it into something else, like some form of discrimination. So a way of sort of helping you as an employer as well is to maybe consider offering some form of settlement under a settlement agreement. And what the purpose of that is to cut to the chase, offer them a little bit more, and in return they waive their rights to bring employment tribunal claims. What you can do, well, up to 30,000 over and above the contractual entitlements can be tax-free. All right, we don't want to break the bank here, but an additional amount on top of what you're paying them already may just soften that blow and help them leave with their head held high. Maybe consider putting lump sum pension contributions. The great thing about this is that it avoids paying tax, putting a lump sum into the pension. There are obviously limits, but that extra payment can be quite flexible. Consider the benefits I've already mentioned, maybe looking to extend them post employment as part of this offering. And the key thing, for a settlement agreement to be enforceable, it needs independent legal advice. What you'd normally see is a contribution to the legal costs just for receiving that advice from a lawyer. The standard is £500 plus VAT, so consider that as well, because in the long run, at least you won't be facing a surprise claim in the future that can cost a lot more. I think my bit of advice for you all is, whatever you do, it's not a nice thing to have to do to exit staff. You're damned if you do, you're damned if you don't. But if you take steps to try and support those staff exiting, they might still be disgruntled members of staff, but I don't think it'll be unnoticed in the long run how you've treated those staff that have exited. That's it from me. I'm now going to pass you on to my colleague Nigel.
Thank you, Ross. Thanks for that. Looking after your people, well, there's many different ways that you can do that. But today, if you can move on to the next slide, I'm going to be looking at private healthcare and mental health care. There's an array of providers with a host of different options that you can include or exclude from policies. Mental health and employee well-being is important to all businesses. Why? Well, 92 billion in lost productivity to UK businesses each year as a result of ill health is certainly one good reason. No lengthy NHS waiting lists, which means back at work quicker. On to the next slide. Key benefits, staff retention. 69% of employees state they are more likely to leave their current role if a new employer offered a better benefits package. Attracting talent. Employees rank healthcare and mental health as the second, only to pension, as the most valued benefit of working for a company. It also saves money in the long run. 45% less absenteeism due to sickness. And handy tip, well, most companies, as a minimum, keep a record of sick leave. Therefore, it's fairly easy to monitor the added value. Next slide. Case study. We have a live company with 48 insured members. This includes spouses and dependents. The age profile is 24 to 59, with an annual premium of 18,000. The average cost of this, therefore, works out at £31.25 per month. It is a taxable benefit, but handy tip, it's not as expensive as you might think, and it's free to add children aged 12 and under with most providers. Well, that's me finished. I'm now going to hand over to my colleague Gemma for the next.
Thank you, Nigel. It now turns to me to speak about some things that you may want to consider over the Christmas break and ways in which you can protect your family and your business. To start off with, make sure that your liabilities are covered by insurance so that should the worst happen, your family will quickly have access to funds to deal with them. You should consider mortgage protection insurance to pay off any outstanding mortgage on your home so that your family doesn't have to worry about that at an already difficult time. If you want to leave a lump sum for your spouse or children, perhaps to pay any inheritance tax liability on your estate, or just to ensure that they are adequately provided for, you could consider taking out a life insurance policy, which can be written in trust. By writing a life insurance policy in trust, the proceeds fall outside of your estate on death and will therefore not be subject to inheritance tax. Secondly, if you don't have one already, my big elf tip is you should get a will. If you don't have a will in place when you die, then the law decides who inherits, not you. And the intestacy rules often don't reflect what many people would like to happen to their assets when they die. Dying intestate can also result in more inheritance tax being payable by your family than would have been the case if you would have done a bit of estate planning earlier on. Under the intestacy rules, no provision is made for unmarried partners. So even if you have been with your partner for 20 years but aren't married, they wouldn't be entitled to anything and would have to bring a claim through the courts, which would be limited to what they need for their maintenance. This would obviously be time consuming and costly and could easily be avoided by having a will in place instead. Wills can also be used to protect your estate against remarriage by your spouse, bankruptcy, care home fees, and can ensure that capital in your estate is ultimately given to your children or other beneficiaries that you choose on the death of your spouse or civil partner. My third point to think about is lasting powers of attorney. Lasting powers of attorney allow someone you trust to make financial and medical decisions on your behalf if you were to ever lose capacity. People often assume that if they lack capacity, then next of kin could automatically make those decisions for them. But sadly, unless you actually have a lasting power of attorney in place, your next of kin can't make those decisions for you if you're unable to. Without a financial lasting power of attorney in place, your bank accounts would be frozen if you were to lose capacity. That includes joint bank accounts until a court order can be obtained. And this, of course, could impact your family's ability to provide for you when you most need it. Next thing to think about is something that I think is really key and something you may want to spend some time considering over the Christmas break. That is my suggestion to keep a logbook filled with all the important information regarding your assets, and your family should know where to find it if you're no longer around. This should include details of all your assets, particularly those for which you don't receive paper statements. You may also want to keep a record of passwords, or alternatively tell someone who you trust what your passwords are. Of course, this is highly sensitive information, so I would strongly suggest not storing it on your computer. You should write it down in hard copy and make sure that any written down passwords are kept somewhere very safe. Having all of that information in one place, I know from experience, will just make it so much easier for your family to deal with your estate once you're gone during a very difficult time for them. My final tip is one for retirement, and that is to spend your ISAs before you spend your pension. Savings kept in a modern private pension do not form part of your estate, and so inheritance tax will not be payable on money left in your pension that is passed on. Money that remains in your ISA when you die does form part of your estate, so if you pass it on, it would be subject to inheritance tax. So it's more tax efficient to spend your ISAs first before your pension pot. That's all from me, and now over to Andy for some Christmas cheer.
Well, thank you, everyone. Good stuff. So let's do something maybe a little more fun. It's Brexit Christmas. That's bad, is it? Well, here's the good news. If you want to buy stuff from China, and I hope we stop buying so much stuff from China, because I don't know about you, but I've been trying to work out how to buy stuff not from China, and it's impossible. Everything comes from China. But you want to wait till after Christmas, well, after the 1st of January, because the import rates for duty and have been announced by the British government. You can look them up. They've said you can check it here, which is slightly unhelpful. But yeah, you just Google trade tariffs post 1st of January. Almost everything's coming down by about 1%. Obviously, the trade tariffs are set by the European Union. and Britain's generally not so into having lots of tariffs. So we'll be hopefully bringing those down, especially as free trade agreements start happening. But yeah, if you want to buy European goods, as the Italian shop tells me, you need to do it now. I suggest you have a very European Christmas, and yeah, wait if you could wait to buy that China luxury after the 1st of January. That's our first tip. Over to Amelia.
Thanks, Andy. So yeah, I just want to chat briefly about some tax efficient ways of rewarding your staff. Next slide, please. So I think it's a sort of a distant memory to everyone, but when we used to all be in one room and have a party together, there is such thing as £150 per head, slight technical point, but generally that's the gist. HMRC have recently said within sort of the last month or so that virtual parties do count, as obviously, unfortunately, we can't all meet face to face. It kind of goes with my handy elf tip at the bottom that if you have a virtual party, any costs that you have sort of putting on the party, so long as it falls within the £150 per head, then that can be given to your employees tax-free. So that means if you have sort of a Zoom event and you invite everybody, then you could essentially give a Christmas hamper or send a parcel to all your employees to the value of £150 per head tax-free. Trivial benefits have always sort of been around, but I think they're probably good to take advantage of now. So that means that if you give a gift of under £50, and providing you meet the 3 conditions there, so they're not cash or a cash voucher, and it's not in reward for performance or contractual, then whatever you gift is free of tax, and that's actually unlimited. So those types of things we used to see if employers gift a bottle of champagne at the year end or something like that, then that would fall under the trivial benefits rule. Again, use of home office has always been around, but I think this year it's going to unfortunately apply to everyone. So as an employer, you can give £6 a week to your employees tax-free. Or as an employee, if your employer doesn't give you the £6 a week tax-free, you can then claim that in your tax return, or there is now a simplified form that you can complete where you gain it as a tax reducer. So you'd get the £6 per week times by the 52 weeks, which is the £312 there on the screen, and then you times that by the rate of tax you pay, either 20, 40 or 45, and you can claim that as a tax reducer, so it comes off your tax liability for the year. A couple of other options, there are such things as salary sacrifice schemes. So if you want to be looking forward through to your pension, you can take money, you can pay directly into your pension, so it comes out of your gross earnings, so you effectively pay less tax into your pensions. And another scheme is the suggestion scheme. So for a lot of people, they're having to improve efficiencies or change the way in which they work now that everybody's working remotely. For those such things, if you can offer someone up to £5,000 tax-free, and it's the greater of the 50% of the money you can expect to make or save in the first year, or 10% of the money you expect to make or save in the first 5, which is a pretty neat scheme if someone's coming up with simplification measures or something that will essentially save you money in the long term. And then lastly, cycle to work. You'd have to be far more active than I am to take advantage of that, but it is a tax efficient scheme whereby your employer can cover the cost of your bike or motorcycle, push bike to work, and you don't need to pay. It's not a benefit in kind, so there's no tax on that. So yeah, back over to you, Andy.
Very nice. The £150, you can do that at any time, can't you? It doesn't have to be Christmas.
No, anytime. Yeah, it's just it's an annual amount. So yeah, anytime in the year.
Nice. So finally, what can you give yourself? Yours, elf, I guess. You can get a Tesla. You can get an electric car, because if you're actually not already aware, it's for the first time ridiculously tax efficient. For years, you may have thought it was incredibly annoying discussing getting a company car with your accountant, because it was a terrible idea. Even if it was an old car, they tax the hell out of it. But electric cars, you can get a full deduction in the company, 0% benefit to the employee. You can do a salary sacrifice. So you and the employee can reduce national insurance contributions. Yeah, it's actually not a bad idea. Any electric car will do. Obviously, Tesla being the most exciting of those. So pretty good. Electric scooters, you'll see lots of them about. So they changed the rules because I don't know if you're aware, but in this country, in London, they were really against them. They couldn't work out how to class them and they see them as pretty dangerous. But they are now allowed if they're rented. Unfortunately, lots of people went and bought one thinking that was a great plan. But no, you need to rent it from many of the numerous companies rolling them out. And you can go terrorize some people in the park if you want. Another tip we heard on the QT, I guess maybe it's an obvious one, but airlines, well, soon, they're already, British Airways is already offering discounts. Basically, what I've heard is they're gonna offer some discounts to the airlines to get the market moving, but they will be short-lived because afterwards the prices are going to go up substantially. So if you see a discount, and I guess if the terms and conditions are reasonable in case of problems, go for it, basically. And yeah, if you believe in the in those who are pessimistic about what's going to go on, you might want to stock up on your Italian food and goods. And a final thought, it's a bit of a crazy thought, but Father Christmas is definitely not on furlough. Let's hope anyway. Uncle Amazon is here. It always seemed an impossibility for anything or anyone to deliver a present to every person in the world. But I reckon within 5, maybe 10 years, Amazon's going to do that. And Amazon may even, take on the green and red jacket like Coca-Cola has to try and sort of say it runs Christmas, because, if you look at it, it's not far off, which is quite a crazy thought. And that's it. So I don't know, Simon, if there's any Q&A, but thanks for joining us otherwise.
No, there's not, Andy. So yeah, thank you, everyone, and Merry Christmas.
Thanks, folks.
Thanks.
Take care.
Cheers, everyone.
See you all. Bye.
Bye.
Merry Christmas.
Merry Christmas, everyone.